Ultimately, people aren't investing in buildings, they're investing in people. And that trust is earned long before anyone signs anything. You're building that trust through a rapport, through a relationship, through demonstrating what you say you're going to do. It's built through that consistency, through the transparency. And that is key to all of these transactions, of these agreements, these contracts, because they're ultimately an agreement that is long term. These joint venture partnerships are like marriages, where you're actually in bed with that person for 5, 10, 20 years. If you're going to be working with a person that long, you want to know that you've got the right kind of values that are aligning. What you're expecting in the way of communication is something that's going to consistently be there. The decision-making process, how that is shared, the financial split, how that's structured, and the agreement itself, all of those things you want to understand up front, but you want to actually trust in the individual that you're investing with.
If you've ever wondered how real estate investors actually build their businesses, not just the wins, but the setbacks, the pivots, and the lessons in between, you're in the right place. Welcome to Let's Talk Real Estate Investing, where we have honest conversations about what works, what fails, and what you need to know before your next move. Hi, I'm Debbie Balfour, real estate investor and investor success coach. I help real estate investors fund their deals through a relationship-first approach by building a pipeline of qualified investors who are ready to say yes to your next opportunity. Each week, I sit down with investors and industry professionals to unpack their journeys, key turning points, and practical strategies that you can apply right away. So let's talk real estate investing. What if building wealth wasn't about chasing the next hot investment, but about applying proven systems, managing risk, and making disciplined decisions over time? Today's conversation is all about engineering wealth through multifamily real estate, the power of passive investing, and why relationships and trust remain the foundation of a successful capital raising. We'll also explore some lessons learned in aerospace and how that translates into long-term financial freedom through real estate investing. Our guest today is my friend, Steve Couper, and Steve is the founder of Couper Group Investments, a company that acquires and operates multifamily apartment buildings alongside its investors across Canada. He's really passionate about helping busy professionals build wealth through disciplined, risk-managed real estate investing, creating opportunities for investors to participate in real estate without the day-to-day responsibility with being a landlord, dealing with tenants and toilets. And outside of real estate, Steve is the director of D&D programs at Cascade Aerospace, where he applies decades of leadership and operational expertise to complex aerospace programs, which boggles the mind. He also hosts Steve Couper's podcast. He serves on the board of directors for the Abbotsford Chamber of Commerce, demonstrating his commitment to both business, leadership, and his local community. In today's episode, we'll hear about Steve's exciting new announcement. So we'll start with that and we'll unpack what he means by engineering wealth, discovering how aerospace has influenced his investing philosophy, and discover and discuss practical advice for busy professionals looking to build passive income through real estate investing. We're going to dive into why trust is one of the most valuable assets when raising capital, and why Steve believes that true wealth isn't just about accumulating money. It's all about creating options and freedom to live life on your own terms. Steve, welcome to Let's Talk Real Estate Investing. I'm really looking forward to this conversation. It is long overdue, and I'm happy we're here. Tell us a bit more about your journey in real estate, Steve.
Thank you for that warm-hearted invitation and welcome, Debbie. That's a wonderful way to actually introduce me. I'm overwhelmed. Thank you so much. It's actually been a long journey. It's something that's built up over decades to get here. Small steps that happen through the acquisition of your own family home, the discovery of how you can create value in real estate, and then leading into what is now multifamily investing. So it's something that we all have an opportunity to learn these lessons. It's about what you do with them that's important. I've recently been honored by an invitation from one of the people that I consider a guru and a mentor in the real estate space, Michael Ponte of the Savvy Investor Group, who invited me to be an ambassador for Savvy Investor, something that I'm truly honored by. And for several reasons, I think the Savvy Investor Group, the Savvy Squad, is something where their vision is to inspire a new standard of excellence. That standard in real estate investing is something that we all deserve. They value the integrity and honesty that I think is so critical. They have the premium level of education, and they built a community that's far and on the best out there. So I'm so honored to be part of that real estate investing group. Thank you so much for having me on the show.
Steve, you often talk about engineering wealth. For everybody out there, what does that mean and how is it different from the way most people approach real estate investing or investing in the whole?
For me, engineered wealth means approaching investing the way an engineer approaches solving complex problems. You begin with the end in mind, understand what the risks are, test your assumptions, and build in those margins of safety. And then as you move forward, you've considered what can go wrong and you're prepared for it. Too many investors, I find, are chasing the highest returns, the latest trends, they're following the squirrels. I would rather be building a portfolio that's resilient enough through different market cycles, because we're in a deep trough of what is a fairly routine or fairly familiar and repeating market cycle. Wealth isn't created necessarily by taking the biggest risks. It's created by consistently making good decisions over a long period of time that help you reach your goals. So begin with the end in mind, understand what fits and doesn't fit, and making sure that you're achieving that goal, and then make sure you put in place the right kind of margins of safety so you don't fall off the tracks as things change.
Makes so much sense, Steve. Both of us having that project management background where risk management is a big part of project management. We see that and we understand that, but a lot of people don't. They like to look at the rosy all the time and they don't want to seem negative, but thinking about what could go wrong and able to mitigate those risks or eliminate them is how you get that reward at the end.
That's right. What that does is it filters out a lot of deals that you'd like to go forward with, but they just don't fit the box because the risk is outside of what you're willing to accept.
By asking those questions like what could go wrong, what can we do, and that's where eliminating the risk may mean that you do not take it on. I definitely have been there where I've looked at a property that seemed wonderful, the price was right, what we could do with it was great, but then when I spent a lot of money actually on due diligence, and what came out of the due diligence said it was not something to go forward with.
Got to be happy with the risk.
Definitely. You've got to be
It's
able
it's
to
it's
live
it's
with that
actually,
risk.
yeah, it's not saying don't accept risk, but understand the risk and build in the mitigating steps so you can manage it to your satisfaction. There's different ways to manage risk. You can avoid it altogether. You can deflect it to somebody else. You can put in place things to mitigate it, and or you can, like I say, you can accept it. Say, okay, I'm willing to do that, but I've actually put a reserve aside for it. So lots of different ways you can approach things like this.
Definitely. And you don't have to be a project manager to you can Google these days, you can ask ChatGPT how to go about doing risk management. But it's definitely something that every real estate investor, whether they're doing something small or bigger, should be doing as part of their project.
Should always be part of your analysis.
Most people won't connect aerospace and multifamily. They seem like worlds apart. So, what lessons would you say that you've learned from aviation that's helped you to approach real estate investing in a different way that maybe others may not have?
It's come back into the same cycle, the same story. Both industries revolve around managing risk. In aviation, small mistakes can have enormous and catastrophic consequences. So that teaches you to build in systems and rely on data to avoid the shortcuts, to make sure you're managing your risks appropriately. Real estate's no different. Every acquisition, every renovation, and financial decision should be made with that same discipline rather than emotion. It's key. And I've spent my entire career coordinating teams and managing budgets and solving all kinds of complex problems. But one of the most important skills that I've pulled that applies directly to multifamily investing is the ability to actually make sure we're putting in those risk management steps. At the end of the day, we're building teams, we're managing projects, we're communicating clearly, creating predictable outcomes, but it's all going to happen if we're managing our risk properly.
Steve, I have an interesting question to ask. Did you, when you first started real estate investing, think that aerospace, like you should be using those skills in your real estate investing? Or did it come over time realizing, what am I doing? I should be using these skills.
I've built a lifetime in aviation. I've been working in it truly since I was 18 years old, which is a couple of years ago. And it's become who I am. The project management approach, the risk management, the different skills that I've got in leading teams and striving to achieve a goal, those have become inherent parts of me. I didn't ever really consider it, but it just sort of followed me wherever I go. So all of those skills are part of who I am. So as I approached real estate investing and moved in to try and figure this nut out, I came to realize that I could leverage all of those skills and that background far more, so very similar that I was surprised by it, how easily the two support each other.
In every industry, you have a problem to solve, or you have a problem that you are solving for people with what you're doing. I agree. It's the same. New real estate investors think they don't have experience and they don't realize that what they do in their day job, what they've done, the skills that they've done to get where they are today. Like you said, when you introduced yourself, you said your journey in real estate include your home that you purchased. And people will say, oh, I'm just starting out. I have no experience in real estate. And they have that fear going into it. And they don't realize that those natural skills that you have acquired over years, whether it's your job, running your family, your volunteering, that all those skills come together.
They
So
do.
I love what you just said. It becomes you.
It all builds and it compounds, much like we want our wealth to.
Yeah, definitely. So, what advice would you give to someone who wants to build passive income but feels they don't have time or the experience to invest in real estate? Because everybody thinks that investing in real estate is you have to be a landlord. What advice would you give them?
I've learned that building wealth isn't necessarily about building more, finding more time. It's about making better use of the time you already have. And that can be sounding a little bit like a motherhood statement, maybe, but I didn't wait until I left my career to start investing. I'm still working full time, but I built those systems and surrounded myself with some really good people and stayed focused on those long term goals. What I can suggest is that the right thing to do is invest in an education that's going to help you understand real estate investing from the lens of a professional. I've been an amateur for years, and all of the home flips I've done in the past have been without the guidance of the YouTube University or a professional education. It's been through trial and error. What I've learned in the last 2 years has well eclipsed all of the education that I picked up through the mistakes I made over the years. The other things to that, building systems and surrounding yourself with good people and making sure you're making better decisions, that's something that comes out of that.
Say people wanted to do passive investing. What's your advice when it comes to education? I'm investing passively. Do I really need to be educated on that?
Yeah, so this is a good question. When I'm raising capital with individuals, I want them to understand not how to do what I'm doing, but understand what I'm doing. Understand real estate investing enough to be able to ask the right questions to give them confidence in the person they're investing with. They need to understand how money is created, how wealth is created. They need to understand the expectations and when they should be hearing back, what they should be expecting to see visually, what they should be expecting to have to contribute, and how this all functions in a big eco-cycle so it can continue and build. I don't believe that ignorance is an excuse. I think we all need to educate ourselves up enough to feel comfortable in our decision. That ties directly into how we build trust. It's not just through saying, hey, this guy's made money in real estate, therefore I'm going to give him my money and away he goes. People should be investing in somebody that instills confidence through the sharing of knowledge and the ability to demonstrate the kind of values that attract you, that are important. So that's, I think, something when somebody's investing passively, they should clearly know the individual, the process, and how this functions. They shouldn't just throw their money at the wall. They should put the time and effort into getting to know the person and how it works.
A lot of people have this misconception that passive investing means they don't have to do anything. Passive investment really just means that you do the work up front. So then later through the process, you don't have to do anything, but you still have to do some work. And that work includes due diligence. You really should understand not just the person you're investing with and their experience and their credibility, but also is that market truly a market that's good to be investing in? Like these questions really need to be answered.
There's a saturation point. Most of the people that I work with that are passive investors, they either don't have the interest or don't have the time to learn to the depth that I've invested in learning. The education that I've pulled together is comprehensive, and most of the passive investors I talk to are interested in the top of the waves. But I do expect them to do enough due diligence to understand what they're getting into, understand the risks, make sure they've actually mitigated them to their comfort level to be able to proceed without actually needing to change their mind tomorrow. Yes, I agree with you in that due diligence is key. I think it's also key that the passive investors have that relationship, have built that power of trust and relationship through their own due diligence. People aren't investing in buildings per se, they're investing in people. Trust is something that's earned long before anybody signs an agreement. It's built through consistency, it's built through transparency and doing what you say you're going to do. And providing that's achieved the right level of comfort for the passive investor, then the active investor has been given the green light and away you go.
Perfect. Yes, definitely. Something I always say is that trust is built before you even start having the conversation about the deal.
Yeah.
So, so what markets are you investing in, Steve?
Despite everything going on globally, I still believe in Canada. And so I'm a Canadian real estate investor. However, there are certain markets that I shy away from. So I'm not overly interested in investing in British Columbia at this time, nor Ontario and the Atlantic provinces, or maybe. But I do focus quite heavily into the prairies, into Alberta specifically, Saskatchewan. I see a lot of potential there where we have the right kind of indicators to check the boxes from a real estate investor lens. And that is to say their GDP is strong. They're seeing net migration, more people coming into the province than leaving. British Columbia is still seeing an exodus. They're seeing the jobs are actually ticking up. We're then able to look at how the vacancies are progressing and what's happening with rents in the area to understand where they sit exactly in that market cycle. The things that are important in those markets are also things like the land transfer tax, which you don't have to pay for property acquisition in Alberta. People are moving to Alberta because it's got one of the highest net income after taxes from all of the other provinces in Canada. So their tax rate is good. So there's a lot of reasons people are moving to Alberta, but it all starts with jobs. So they
Hmm.
go where the work is. They find a place that's affordable where they can raise their families. And that's perfect for the housing provider like myself, right? Because the first few years that people move to a new place, they tend to be renters before they decide to buy a home. So as a rental housing provider, this is ideal. We provide safe and secure foundations where people are able to actually set up shop and get comfortable and then be able to actually make decisions for their family a couple of years down the road. That's the goal here. Safe and reasonably affordable housing.
I just saw a statistic today, Steve. It said something like Alberta has migration of 37.4%, while the others have negative.
Yeah, well, this is it. Everybody's moving to where the work is.
Yeah.
And like I say, it's an affordable place to raise a family. It's a hard climate, sure. But you know what? It's got a lot of positives.
Also, it's landlord friendly, not
Landlord
tenant
friendly.
friendly.
Yes. Let's make sure we don't forget that one. What that means, it's a self-regulating market. So there isn't a rent control in place that's imposed by government. Instead, the rent control is imposed by what the market will bear. So if vacancies are all of a sudden increasing, people are dropping the rents, which is happening right now, to make sure they're still attracting tenants as opposed to in other climates where you've got an imposition of I'm only able to raise the rent by 2% per year. Well, it automatically happens, and there's no control over the expenses. So your insurance rates can go up 8% a year, but you're only able to raise your rents by 2%. Then what happens is that market becomes unfriendly for the investors, and it's something that it's hard for that business to succeed there because real estate investing is a business. So if you don't have control over your expenses, but you do have something limiting your income, you're getting squeezed in the middle. And it comes a point where people are losing money. And we're seeing so many examples of investors that are having to sell at a loss or going into foreclosure. It's happening at an unfortunately high rate right now because of things like
Alberta has so much going for it, as you mentioned. So, just to recap, we've got no land transfer tax, which is more money in your pocket, lower buy in, your property prices are less, you're getting more larger lots for it too. Also, you're not stuck with a tenant that's not paying for 9 months to a year as you battle to get them out.
the law supports you. If your tenant isn't paying the rent, then you're not obliged to give him housing. You're able to evict them, which unfortunately in other provinces, you can have the tenant not pay the rent for 9 months and you're still trying to work on to get the support of the law to help evict the person. That's ridiculous. That's just a charity.
And then income tax, carbon tax, all these other taxes.
Hmm.
I do wish the climate was a bit friendlier.
Yes, that would be nice, but you know what? You can't have it all.
Definitely. I'm going to hop now back to a conversation we were having earlier, Steve. I know that you've built your real estate business largely on relationships. And in your opinion, why is trust so important when raising capital and working with investors? And maybe this is a rhetorical question.
It's a bit redundant. I did cover it, but ultimately, people aren't investing in buildings. They're investing in people. And that trust is earned way long before anyone signs anything. You're building that trust through a rapport, through a relationship, through demonstrating that you do what you say you're going to do. It's built through that consistency, through the transparency. And that is the key to all of these transactions, of these agreements, these contracts, because they're ultimately an agreement that is long term. These joint venture partnerships are like marriages, right? Where you're actually in bed with that person for 5, 10, 20 years. If you're going to be working with a person that long, you want to know that you've got the right kind of values that are aligning. What you're expecting in the way of communication is something that's going to consistently be there. The decision-making process, how that is shared, the financial split, how that's structured, and the agreement itself, all of those things you want to understand up front, but you want to actually trust in the individual that you're investing with. And that goes two ways. Okay, it's not just the passive investor investing with the active partner who's going to do all the work. It's also the active partner knowing that he's actually working with an investor that understands and knows what his role is. And both sides of those agreements, there's a role. The active partner has a lot of duties, a lot of things they're expected to know before they start, a lot of things they're expected to do during the course of that partnership. And the passive investor, they basically provide the money and receive the updates. but they have to understand what they're getting into in order to be able to feel comfortable and confident in a long-term relationship. And so that only comes through that establishment of trust up front.
Understanding those relationships help you understand whether you have alignment, because not all money is good money. Not everybody with money is a good partner for you. That
For sure.
alignment needs to be there.
Yes, absolutely.
So it's similar to when you're going to job interviews. A lot of people go thinking that they're being interviewed, the people seeking for the job, and they're all about, oh, I have to prove myself. But it's the same thing when you're going to a job interview. It's not just about you looking good to that employer. Does this employment look good to me? Is this a company I want to be working with? The same applies. Again, real life does apply to real estate investing.
Real life does apply. I mean, we've recently been hiring a young co-op student, and I've used that same line. This is not just about making sure this is a good fit for you, it's a good fit for us, but it's also got to be a good fit for you. And that holds true as we're forming these partnerships in real estate. It's got to be a good fit for both sides.
You often say that wealth creates options. What does that mean to you personally?
Well, for me personally, wealth isn't about luxury per se, it's about freedom. The ability to spend more time with my family, to support the things that I care about, to choose the work I want to do where, when, and to help others without any financial pressure influencing all those decisions. I've often said I want to be able to go where I want, when I want, with who I want, and not worry about how I'm going to pay for it. Well, that's maybe a little bit of a luxury statement, but it's something that I want to actually call freedom. That's my definition of it. I don't want to be unable. And so the opposite, if we think about that, the opposite is wishing I could go to Portugal with Debbie when she travels there, but discovering I can't afford to go, or I'm unable to find the time to do that. I don't have the resources to support it. I want to be able to, when the opportunity arises, be able to pick up and go for as long as I want without having to worry about it. I believe in philanthropy, and I want to be able to support young students that are seeking a university opportunity. I've recently handed out 3 scholarships to grade 12 grads that are moving on and able to actually take those scholarships and be able to actually help support their next phase of their education. For me, this fills my cup. The opportunity to help support them in their educational journey is something that really is important to me. So I want to be able to continue doing that through a foundation I established that's able to do that sort of thing. These are the things that I care about, the ability to help young entrepreneurs find their footing. And those are things that are important.
What do you say to people that think that I don't plan on quitting my job? I don't need that second income.
Well, I mean, I'm one of them. I'm going to continue working until I don't want to work anymore, or until they don't want me to work anymore. But I don't have any intention of saying by this age I'm done. I actually am willing to continue going as long as I enjoy it. So I've mentioned I've got a lifetime experience in aviation. I started when I was 18, and I'm still here today, and I'll keep on going as long as I enjoy it and as long as they'll have. It's something that is in your blood, I guess, after a while.
That you're passionate about.
I'm
So,
very
yeah.
passionate.
Yeah. So, freedom to you does not mean I can't wait to quit my 9 to 5 job. Freedom to you is I will stay here. It allows me to keep doing what I'm doing for as long as I want to be doing. But it also comes with those benefits, as you mentioned, of being able to go off and travel and being able to give back to society and being able to buy whatever you want without checking the price tag.
Yeah, I'm not so large on material acquisitions, but I am on life experience.
Mhm.
So for me, that's
Experiences.
yeah. I want to live as full a life as possible. And healthy one, by the way. So, I mean, I'm not necessarily indulging in all the chocolate I can find, but I do believe there's something to be said for the climate you're in and being able to actually, maybe a yoga retreat at some point in the future would be fun in Bali, wherever. I don't know. I haven't really mapped that out, but I want to be able to say, let's try that every time something comes up that appeals to me and not worry about how it's going to be paid for. I want to make sure my son has every opportunity to become the best version of himself, and he wants to. I want to fill him with the dream of pursuit, challenge of trying to become that best version of himself.
What would you say to new real estate investors that are maybe starting later in life? What
You know,
advice would you give to them?
there is no time that is too late to start. The only mistake you make is not starting. So if we think about it through that lens, when you make the decision this is for you, then do something. Get in there, get that education, and learn enough to give yourself the comfort that you're making educated decisions. And if you've got that in place, then the sky's the limit. There are cycles that we all need to be aware of in the real estate market. The real estate market is something that's cyclical. There are going to be decisions that you're going to make at certain times in that market cycle that you wouldn't make in other times. So you have to be educating yourself to be aware of those, map out what strategy to employ where,
And grab the opportunities with those cycles.
grab those opportunities during that. This was documented by one of Canada's gurus in real estate, Don Campbell. He wrote a book called The Canadian Real Estate Market Cycle, and it actually maps it out quite clearly. Here's your boom cycle and your slump, and here's the indicators that you need to look for. As I mentioned it earlier, you're starting to see the GDP and the vacancies and what's happening with rents, and you're watching all these indicators go through the roller coaster ride. Well, they always do. They always do.
What would you say to someone, Steve, that's right now saying, because I hear it all the time, this is not a good time to invest in real estate?
I would say pay attention to Warren Buffett. As you listen to that man who's acknowledged as an expert investor who had a whole lifetime of making money for people, I think the phrase he coined, if everybody's being greedy, you should be wary. And if everybody's being wary, that might be the time to be
Time to
greedy.
be greedy.
That's the
Yeah.
time to take action. And when you see the blood on the streets, that's the time for you to be there finding those opportunities because the cycle will change.
Yeah, definitely. Well, thank you so much for your time, Steve. I really appreciate it. I love this conversation. And for all those out there, could you please hit that like button and subscribe so
Click.
you can get more of these coming to you and with notifications. Thank you so much for your time, Steve. And thank you for coming back.
Yeah, it's been an absolute pleasure, Debbie. Thank you for inviting me back. Really appreciate it.
Anything on your horizon, Steve?
As we mentioned, there's a little bit of blood happening as we look at the streets, so I'm going to keep my eyes open and find those investment opportunities for sure.
Excellent. Well, good luck with that.
Thank you.
Bye, everyone.